Thursday, September 18th. Market analysis, Stan Ehrlich. Sorry this is so late. Had other obligations this afternoon. It's 4:35 California time. I start out with indexes, go to futures, and then some other stuff. Let me say, this market has been stronger than I expected. It is setting itself up for a big reversal, which has not happened yet. I am disappointed that the SPY reversal 2 days ago, which looked very promising, we were bumped out of because it made higher highs. But that's our discipline. That's our stop. That's our fail-safe. So we're flat. Now, overbought conditions. Market's not showing any weakness. Another new high close. All I got to say is watch out. I would not be buying new long positions. I would be watching very carefully for any kind of a sell signal that you can justify, you're used to, you like to use, you trust. Mine are bearish engulfings in overbought conditions, and we automatically color them red or at bottoms green. No signal yet. I'm prepared for a new short any day soon. Next, we got the 5-minute chart. Yeah, it's a 1-minute chart on the MES. Up, steady, a little wobbling, of course, usual stuff, but no gigantic ranges, super big volume, lower closes, taking out previous day's lows, etc. Next, Spider, same kind of commentary, and we are now bumped out of the reversal that happened on Tuesday. But many times, these reversals are not necessarily the high of the move. We had one 2 days later that produced a really nice big break the next day. But they are often part of topping out or bottoming out process. So they are basically a warning, or that's it, the day they occur. And that's many times. Now, Spider, 5-minute, up you go, and basically sideways with a little bit of a down channel look to it, nothing major. QQQ, gapped up. When markets gap up in overbought conditions, you can say that prematurely that this is a possible exhaustion gap. Well, we got to start going down in order to call that an exhaustion gap. In retrospect, 2020 hindsight, there's a good possibility that that's what that is. But we'll find out soon enough. Popped up, came back, almost closed the gap, but did a very good job. Left a little bit behind, popped in a new high ground, and drifted off a little to close fairly strong. Overbought. NQ. No gaps because it's the 22 out of 24 hours. That's why only on weekends do the forex markets, which trade 24 out of 24 hours, they don't gap because they are never closed. Okay, overbought. Now I'm so late today that the afternoon market has already started to trade up just a tiny bit. NQ, 1 minute, up slightly in the PM market, or pre-tomorrow's date, Friday's market, so to speak. And what can I say? Stronger, closed strong. Overbought conditions, the only thing I'm very worried about, because I've seen it happen way too many times, that people will get optimistic and enthusiastic and think that they're left behind and they have to buy it before it goes to the moon. They always buy the top of the rally. Next, YM, same condition, except this is the only index that's not overbought. Now, when I mean overbought, I don't mean the traditional George Lane stochastic or Wells Wilder's RSI and other oscillators. My oscillator is an RSI. I learned RSI from Wells himself, and it is a customized version, and I don't use the same overbought levels, nor is the calculation by any means the same as his traditional RSI. Much faster, much more sensitive. Next, YM, still climbing on the average. What the heck can I say? Russell, overbought, getting close to important historical resistance areas. That'll be about 25.40. Could do it next day or two, but tomorrow's Friday, and of course then you got next week. Next, climbing still, even in the PM market, beginning of the next calendar day, we have new highs again. Next, bonds. The outside down day bearish engulfing I told you about yesterday and showed you has worked very, very nicely today, closing substantially lower, below the lows of the last 5 days. And in the PM market, you're down even a little bit more the beginning of tomorrow's date. Perfect. Right on. Now, how far down is it going to go if it continues? No promises in this business. Probably to at least 1520s, but that's so close. I wouldn't be surprised to see it down into the 13s. Next, we also had a bearish engulfing yesterday of 10-year notes. Perfect. Dropped off sharply today, closed so-so lower, and a little bit lower in the PM market. So it's working. As a matter of fact, today it bounced right off of that support area I told you about yesterday, and it's been on the charts for quite a while now. But I think it's going to go down probably to 111, maybe even the 110 area. Crude. Between a rock and a hard spot. Not much going on. Support is holding it when it gets down there once a month, once every other month since June. And resistance has stopped the rally so far. I'm waiting for signals and or a breakout. Basically, natural gas is doing exactly what I've been talking about for many months now, several. Complex head and shoulder top broke out to the downside on the close on June 25. We've had a rally, a little double top here. Today it dropped down very sharply, almost a new low close. I think it's going to be probably a new low and a new low close for the last week or two tomorrow, and it could even be more substantial than that. I am looking for 1.3. Next, heating oil between a rock and a hard spot, something like a pennant formation, you could call it maybe, forming. Not quite conforming to the rules exactly, but you know, higher highs over a bit of time and lower highs over a period of time and higher lows creates maybe a channel, but usually a pennant or something like a flat top or flat bottom right triangle. They're all similar in many respects. Gold. Bearish engulfing yesterday worked great. Lower low today, closed lower, a little lower in the pre-market or post-market. So, and that's not correct. The terminology is in the morning market, the early market for the next calendar day. So at the beginning of the session, which is 23 hours long, gold doing great. I think it's going to come down at least to 35.35. I wouldn't rule out something under 33.50. Next, silver. No reversal on top, just got overbought and turned around. Looking for new lows, minimum 40.40, but probably more like 36.60. Next, platinum. Rocking a hard spot, waiting for reversals and or breakouts. Test of support 2 days ago. Yesterday passed the test, bounced right back up, and not doing much at the moment, up just a tiny bit, kind of flat. High-grade copper. Probably going to make new lows. The minor upside breakout couldn't get anywhere on Monday, Tuesday, Wednesday, Thursday. Yep, that's right. This week. Tried. Minor upside breakout, went right back into the same trading range. Neutral to bearish on copper. Now we got soybeans. Grain complex, I'm trying to justify a long-term bull trend. We need more new highs, and we need some major upside breakouts. And then this whole mess of trading for what appears to be at least a year. Yep, that's it, a whole year. Pretty substantial time frame would end up being a bottom as long as we get above 11 on a closing basis. But I need other little minor upside breakouts in the meantime. Next, soybean oil, dipping down a little bit more. No change in opinion, except I have to completely now delete the neckline on that head and shoulder. This is the second time I've done that, so I can't justify 2 times. We broke the neckline. It's no good anymore. We've got a big, broad trading range we broke out of to the upside, which is nice. And that was basically June 13th. All of the lows are back down to approximately support area, beginning of it. That was a couple of weeks ago. That's okay. Now all we have to do is start to see higher highs, and we're down a little bit again today. Next. Soybean meal, a little bit of a dip, but a relatively steady close. No change of opinion, looking for higher levels. I need soon, in a week, let's say, or sooner, some new highs for a few weeks. Next, corn. Same comment, except corn has done that just the last couple of days. So dipping down just a little bit here is very acceptable. Don't think it's going to come down very far. Maybe buy at 417 might occur. Can't be sure. I like it. I'm looking for higher levels. There is a gap to close at 440. So that's my minimum upside objective at the moment. But I think something like 448 is much more likely, 447. Wheat, a little bit of a dip. Somewhat of a possible double bottom. Not looking all that great. And we weren't able to make new highs for the last month or so yesterday, which is too bad, and we dropped right back down. So resistance is stopping the rally so far. So the wheat is looking the least likely to have had a long-term bottom at this point. And we're going to Shell, stock. Testing support, waiting for a breakout. I do think it's going to be heading down. Major resistance to stop the market at this level. A second time, third, fourth, fifth, sixth, 7, and a week's worth recently. Looking for probably a move down to about 66.80, maybe 64. Next, Apple, resistance has stopped it again. And ladies and gentlemen, we have an outside down day, bearish engulfing. The only reason why it's not red is because it was not overbought within the allotted number of back days. It doesn't have to be overbought on the same day, as long as it's overbought within a few days. Little secret as to how many. Gap to close at lower levels, so we're coming down to close the gap, in my opinion, right away. 234 and a half, maybe 60, and maybe even down to 225 and a half. Then we've got Apple. Gap to close, bearish engulfing. Wait a minute. I was just looking at Apple. Sorry about that. Next, we've got a higher high with a poor close on Tesla. Now, we're not at any particular important resistance level, very minor, not that big a deal, but we do have overbought conditions that got up to 91 or 92. That is screaming bloody murder overbought that's going to go down. And we saw it drop off a little, not much. There's a gap to close at 396 area. That's going to get closed. I'm feeling very confident about it. But the next support level, which I think is also going to be reached very quickly here at 366, I'm not so sure that's going to stop the decline. I could see that and lower. And NVIDIA. Support held yesterday in a down gap. We turned right around, went right back up, closed the gap almost exactly. The low of the day is the same as yesterday's high, give or take a couple ticks, and then turned right up again. But resistance overhead has stopped it so far around 184, and so far support in a zone around 170 and a half to 165 and a quarter-ish. Let's call it 165. Back to the E-mini. You have a great day and profitable trading to you.